Let me straighten up.
Excellent. Well, I want to welcome everyone to the National Black MBA program on how to invest. And I want to tell you a little about the National Black MBA Association.
Okay, thank you, David.
Although we do have MBA in our names, it is for African American professionals. And we're all about 5 pillars. And those 5 pillars are education. So we're always encouraging people to go back and improve their education. Career, how to move up the corporate ladder. Leadership, how to develop leadership skill sets. Entrepreneurship, how to become a successful entrepreneur. And lifestyle. So all throughout the year, we'll do programming along those 5 pillars: education, career, leadership, entrepreneurship, and lifestyle. Now, overall, the organization was founded back in 1970. We're a local chapter, one of 40 US chapters, and we have over 500 corporate sponsors, for not-for-profits associated, and over 20,000 members of the National Black MBA Association. Okay. So we're a very large organization, and we have one of the largest national conferences. Typically each year we have a national conference. Last year, due to COVID, it was virtual, but this year we're going to have another one again, where the attendance typically is between 9,000 and 18,000 professionals at our annual conferences. And typically at these annual conferences, over 400 of the 500, Fortune 500, actually they're recruiting because we're one of the top venues of find diverse talent. But now that I told you a little about our organization and in town, and I still invite all those on to also go to our website, Cincy Black MBA, and that's CINCY blackmba.com. Check us out and potentially join and become a part of what we're doing, from the programming and some of the benefits as well too, as we continue to grow what we're doing. Now, getting to today's program, it's all about how to invest. As I was telling Shawnda and Sil, who's going to be our panelists for today, as we're doing our strategic planning late last year, our members were constantly asking us, talking about one of the top programs they want is how to invest. And when we rated that, it came back the top program that our members wanted. And so that's why we're kicking off the year with how to invest program, fitting under our educational pillar. And also, as we were structuring this, the things that came out that we plan to go over today is learn the basics of stock investment, which we'll get from DeRamus, and learn the basics of real estate investment, we'll get from Sil Watkins. But also what came out of this is we always try to offer something to the attendees of our event, something meaningful and within the theme of the event. So with the how to invest event, our members came back we talked about giving money for people to go on their stock account and some other things. But what came back from our members is, our members like, you know what, we should give away stock in an African-American owned company. And that's how it came to that Radio One, which is now Urban One, that we're going to give away stock in Urban One. So 2 attendees will receive 20 shares of Urban One stock to show how important it is our contribution to help people into their how to invest. And so now I'm just going to briefly introduce these panelists, and then we'll end up getting started. So first I'm going to introduce Sil Watkins, the CEO of, could you say, is that Swewat? How exactly do you pronounce that?
Swewat.
Swewat. And that's a real estate holding and investment company. Sil is also the pastor of Living God Church, and he's also a member of CEAI, which is the Community Economic Advancement Initiative, and CUFA. Now, let me also introduce our other panelist, Shawnda DeRamus, the founder of Strategic 513. Shawnda is a successful stock market trader and founder of Strategic 513, a stock investment education firm empowering individual investors with tools to demystify the stock market. Strategic 513 exists to enable African American and women to create multiple streams of income and fuel their dreams. Shawnda is a highly successful strategic leader with over 25 years of experience in healthcare, finance, and economics. She holds a Bachelor of Arts in Manufacturing and Masters of Health Administration from Xavier University and has been investing in the stock market for 20 years. And so now that I've introduced our panelists, now I want to turn it over to Sil to get started with this portion of the basics of real estate investing. So Sil, lead the way.
Okay. Okay. All right. I got 15 minutes.
Just
Go
a
ahead.
suggestion, you may want to ask everyone
I
to
have
go
a
to mute.
question.
Mute.
Did you know oxtails?
You can get them to mute.
1 second. For everyone, I forgot to mention, there's a chat box. One, I want everyone to stay on mute. And two, for your chat box, feel free to enter any kind of questions you may have. So if you have a specific question, we'll ask the
One left? Yeah, let me see. Okay, all right. All right, thanks.
Nina, put yourself on mute, Nina. All right. You ready?
Yes, go right ahead.
All right. All right. There are 4 basic principles that we utilize in real estate. Of course, you know, real estate is like probably proven to be one of the best investments that you can ever have. It actually has outperformed the stock market as far as on your return in investments. So the 4 steps, and I had to switch them because now you got to understand that the stock that the real estate investment is a fast game now. So when I used to have find the property first, I had to flip that to funds. So you have to get funded. You have to find your funds in order to do a real estate deal. All right.
Okay.
And that process is not as complicated as you think it is. There are a lot of banks out there. There are a lot of hard money lenders out there that will lend you the money to finance a deal. One of the best banks out there, I'll give you that, is Spring Valley Bank. Spring Valley Bank will not only finance the acquisition, it also finance the rehab cost on the deal. So you probably want to go first and get pre-approved for funding, unless you have investors or you deal with a hard money lender. Then the second step that you want to take is find the property. Finding the property is a little bit more complicated than it used to be because people move real fast. As soon as new listings come off, they sign a contract for it immediately. And once they sign the contract, they allow themselves enough days in case the property doesn't meet their requirement, they can get out of it. And that's called your due diligence. All right. And I'll get into that in 1 second. And then the other step that you want to be on is fixing the property. Now you got to fix the property up. I always advise people for the first time, and don't get into an extensive rehab job. Just do the basics. Upgrade the kitchen, upgrade the bathrooms, landscape it, and paint it. Don't get into tearing out walls and unless you got some experience, or unless you got contractors that can do that. And then the final step in it is flipping the property. So you want to get the funds, you want to find it, you want to fix it, and then you want to flip it. Those are the 4 basic steps in this particular business. And then what you got to do initially, you have to decide your budget. You have to put together a budget. You can't just go through a house. And this is why when you sign a contract on a piece of property, you want to do your due diligence. You want to put it out 10 days or more. It gives you enough time to get a contractor in there to give you a cost of what the rehab job is going to cost and whether this is going to fit in your budget. So you decide on what your budget is. And then once you do that, you know, you research the market. You make sure that your property, once it's done, that it will have a return on it. Okay. And then you need to identify your resources. So you always want to identify your resources, whether it's contractors or finance. You just want to always do that. And then you always want to, when you go in and negotiate a deal on the property, you want to go in and begin to negotiate the deal. You know, somebody, if they want 100,000 for it, nowadays properties are going for what people are asking for. Even rehab properties are going for what people are asking for because people know that there's profit in it. And then you have to plan your renovations. Plan your renovations. And the other most important thing you do is stay committed to your timing and your tasks. Stay committed to your timing. The thing I learned about, there's one thing more important than money is time. You know, and you have to utilize your time wisely because time is the only thing that you can't stop, you can't fast forward, you can't pause, it keeps going. All right, so you want to be able to utilize your time. So you want to stay committed to the time. And then you want to make sure that when you sell the property that it meets your financial goal. It meets your financial goal. Now, there are 5 mistakes that people make. And I know I'm pushing this off to you real quick because I think I only got 15 minutes. So I'm trying to feed you a whole lot in 1 second, but I'll give you opportunity to ask me questions. Now, there are 5 basic mistakes that people make that I say. First thing you do is people skip the homework. You know, you can't skip your homework. You got to do your homework. You must do your homework, right? The second thing that people do in this business and they lose money is they overpay. They say things like, well, I got an uncle and he can do everything. Nah, don't do that. Don't do that. Don't let one person, unless he's a general contractor and he has a lot of employees, do everything on the job. Because once you do that, that one person is going to tie you up. And I'm telling you, time is more important than money. He's going to tie you up. Now a 2-month job going to take you 6 months. And every month you're going to lose money. The third thing is underestimating the cost of repairs. You know, you think that you might know what it costs. No, find out exactly what it costs. Because that's a serious mistake to underestimate the cost of repairs. And then, like I told you earlier, you got to negotiate your due diligence, because that gives you enough time to get your contractors in there to do your budget and do your research that you're able. Now, the 5th thing is the most important thing. And we all do it. We all do it, especially men. Not asking for help. Not asking for help. You know what I mean? Swallow that pride. Get rid of it. You have to ask for help. You know, because this is how you trying to make money. You ain't trying to make friends. You're trying to make money. So you have to ask for help. You have to ask for help when you're dealing in this. If you don't know the answers, you need to call people and find out find the answer. So those are just some of the basic tools that you need in rehabbing. Finding the property is difficult because there are limited properties out there on the market to sell. There are different ways that you can do that. You can go through the MSL listing. You can drive around. You can check Craigslist. You can ask the realtor friend of yours if there's anything out there that you can purchase. And these are some of the key things. And once you start letting realtors know, and once you start letting people know you're in real estate, eventually they'll start calling you and saying, hey, I know somebody got this property. Hey, I got this property over here. You think you might be interested in it? All right. And then, like I said before, you know, and once you find it, then you need to start beginning to find the funds so that you can flip it. All right, I'm gonna leave rooms for a few questions.
Okay.
I'm better. Go ahead.
The first ones I wanted to touch base on one thing that you said. You mentioned research the market for the house. So
Right.
let's say they're looking for a house. What are some of the easiest ways for some of the people that are listening to research what's the market for that potential property that after you had it fixed up?
Yeah. Every community is viable. I mean, every community is booming right now. You know, as we know, as African Americans, our communities are the hottest ones on the list. Avondale, College Hill, North Side, Evanston, Walnut Hills, they're all hot. To research the market is basically what you want to do is once you put together a budget, you want to make sure that when you sell that house that you can get that house. So what you do is you get on the MSL and you say you got a 3-bedroom, 2.5-bath house in this particular neighborhood, and then you just put the zip code in. You can do this yourself, or you can hire a realtor. You can go to a Sipsy Klein or Remax and you can put the zip code in, and these specific 3-bedroom, 2.5-bath, and you can see what the ones have recently sold for or on the market for. And that'll give you a guideline as to what you potentially can get.
Okay. Another one of our questions, I encourage anyone that was listening, if you have questions, feel free to type them into the chat window and we'll try to get to as many of the questions as possible. Another person asked, are there any real benefits to hard money lending?
Yeah, if you utilize your time wisely, there is. Now, most of the time now, hard money lenders want you to hold on to the money for at least 3 months. So they want to make something. The interest rate is not that bad. Interest rate is not that bad now. I mean, money's cheap right now. For investors, you're probably getting 4 to 5%. Hard money lenders probably want 10 or 12%. You know, and if you don't have access or you're not capable of getting money from a bank, then take the 12 or 10%.
Okay, maybe
But factor it into your budget and make sure, you know, factor in to your budget, your mortgage payments, your taxes and your insurance and your utilities, along with all your rehab costs.
okay. And getting back to, could you explain to them a hard money lender? So potentially they may not be able to get a loan from a traditional bank. Could you explain to them a hard money lender? And that's the fact that they're getting this money at maybe a higher interest rate for whatever period they're holding.
Yeah, there are less requirements with a hard money lender. Sometimes they want you to have 10%. Some of them now take 5% based on your experience. Most of them want you to have some experience, at least one or two houses up under your belt. And there are some out there I'm not familiar with, but I've been told there are some out there that don't require you to have too much to have experience. Now, be extremely cautious about them. Google them. Ask for references, because you know Built Realty was out there and they were scamming everybody.
Okay. So is there a way? What's the best way to locate hard money lenders, and then how to evaluate them?
The best way probably is just to Google hard money lenders in your area. You don't have to do it in your area because they'll lend you money from California. This market up here is unbelievable. I'm on my way to Toledo tomorrow. You know, I'm gonna probably buy maybe 10 or 20 houses up there and start working up there because I believe Toledo is gonna be on a boom soon. There are hard money lenders that will lend you money from California to New York to Atlanta, and they'll come to Cincinnati. They know that Ohio is a hot market. And the reason why Ohio is beginning to get real popular and people want to move here, because people are tired of natural disasters. People in California and Florida, they tired of fires. They tired of earthquakes. They tired of tornadoes and hurricanes. So they're gravitating toward the middle of America. And places like Cleveland and Toledo, you know, and other places like that are going to become really popular.
As well as for low cost of living. As well as for the low cost of living and relative low cost of housing. Because like the same house here,
right. Yeah, you can buy a house. You can buy a house in Toledo for maybe 20 grand and maybe put 30 in it, and you can probably sell it for 129.
Now, you also mentioned the importance of time. So roughly how long do you maybe for an average rehab, do you recommend to allocate for a time for this project?
Yes.
You purchase to when you need to try to have it on the marketplace?
Yeah. Usually the time, the rule, thumb of rule is 3 to 6 months. That's from time that you purchase it to the time you sell it. You want to give yourself 3 to 6 months, depending on the rehab job. Now, if it's an extensive rehab, it should take you about 3 to 4 months to do it. And then it usually homes sell pretty fast now, so you should be off the market and sold by a couple of more months later, if not sooner. Sometimes they go on the first day. Now, houses that are under $200,000 are getting multiple offers, and people are getting much more. I just mentored a few ladies a few months ago, and they put their house on the market for 169, and they got 191 for it because it went into multiple offers. So houses under 200,000 usually go into multiple offers.
Okay. We also had a question, because you mentioned about making an offer, but having a due diligence window of at least 10 days, or a window allow up to 10 days for you to do due diligence. So one person asked you to really kind of clarify that. So you make an offer that you, with a period of 10 days out, or could you elaborate a little bit more on that?
Well, once you sign a contract, a real estate contract, you want to ask the realtor to give you at least 10 days. I would ask them for 20 and let them bring it down, because then that gives you enough time to bring in a third party who can do a proper inspection of the property, because you definitely need somebody to come in to inspect it. You want to make sure that the foundation is straight. That's your major concern. One of my skills is that I'm able to look at a house and see the beauty in it when other people can't see it.
Okay. Another question.
And when you go ahead.
Well, no, keep going, Sil. Keep going.
Yeah, because that allows you enough time to estimate the repairs. And when you do bring a contractor in, try to hang around the contractor and see what they're doing. Familiarize yourself with the process. So you don't get overcharged, because people will do that. They'll come in, they'll know you are a novice, and they'll say like, oh, I got to tear the wall out, I got to take that pipe out, I got to do all this, and and then once you become familiar with the process and they tell you, they say, all you got to do is bust a hole in the wall, tear the pipe out, put a new pipe back in there. But people will exaggerate, and they do that because they want to overcharge you. But go ahead, what's the next question?
Okay, another one is, someone asked, how difficult is it to manage products in another city? So there may be another marketplace where homes, they're much more untapped value.
Right.
So how difficult is it to manage products in other cities?
Well, I buy in Atlanta, and I do everything over the phone. I rehab a house in Atlanta over the phone. I did it for the first time one time, and I said, let me see how this works. And so I hired one person to oversee the operation. They didn't know what they was doing. They was a friend of mine, but they had a learning experience, and now they doing it themselves. So I did it over the phone. Then I did another one. So that's what I do over the phone. I can do it. Then I fly down occasionally, just see what the progress is. I mean, they can FaceTime me. They can Zoom, whatever, however they want to do it. They can take a video of it and show me the work that they've done. But I don't pay nobody up front.
Understandable. Another
Right.
question is about, do you recommend investing in real estate investment trust, REITs?
I don't, but yeah, I mean, it's a good option. I don't, but yeah, you can. I don't.
Okay. And did you expound on what a REIT is for other people on the call?
It's a trust. It's a real estate investment trust. It's just something that you you put money in, and you look for a return. I mean, that's a simple way of putting what it is. It's a real estate investment trust.
Okay.
I just don't. I think, yeah. Let me read. I don't know. I don't know exactly what the operation or what it is. I mean, I do have trust, but I don't understand the complete operation of REIT. But if they Google it, they'll find out exactly what it is. But I don't invest in it because the return is just so good in real estate. I just don't. I don't have insurance. I don't have a life policy. I don't have a funeral policy. You know what I mean? Just sell a building.
Love it, love it.
I don't give my money away.
Love it. All righty. Well, I'll still encourage people to put questions
Sure.
in the chat window. We'll still come back to Sil with more questions. But now I'm going to turn it over to Shawnda DeRamus to give us an overview of the basics of stock investment. Shawnda?
Excellent. Ben, I have a presentation, so I'm going to share my screen.
Okay.
All righty. Can everyone see my presentation slides?
Yes.
All right, and I just will, oh, that's not the right deck though. Let's open up the right deck. I will, as a segue, just say that I have invested in REITs previously. I think for those who don't want to necessarily get their hands dirty, but still want the access to real estate investing, it's a great vehicle. One of the ones that I have enjoyed historically, I don't have any right now, but JOE, they own most of the real estate in Florida. That's a good one. And another one is medical, it's MPW, medical properties, something or other. But they actually own most of the hospitals that you go to. Those hospitals are not owned by the hospital facility. They are rented, they're leased by the hospital, and they own the hospital. So just there's two that you might want to look into. Just wanted to throw that out there. All righty. So hello, everyone. I'm really excited to talk to you today. My business, Strategic 513, we provide stock education for people in small groups. So the goal of the business is to, I was really concerned about the fact that my friends, particularly my female friends, as well as my African-American friends, really weren't investing in stock. And so most of my really good stock conversations were with people who didn't look like me. And that really bothered me. And so I started helping friends. And then finally a friend said, hey, you need to monetize this talent. We need to pay you because you keep helping us for free. And I'm sure they'll be able to help other people. So I always tell people that, and I have to say this, I am not a stock advisor. Invest at your own risk. My goal is to teach you to make better decisions about your own choices. All righty. This was an article that was in the Associated Press in October. The headline says, stocks are soaring. However, most Black people are missing out. And I was very disturbed by it. It was a very good article if you want to look it up. And that's a problem. That's actually a major hole in why our community is not moving forward in acquiring more wealth, because we're not participating in stock market investing. Now, obviously, it's not the only reason. Our most people's primary form of wealth is in their homes. And obviously, if you devalue the value of our home because the person who lives in it is Black, and then makes the home across the street that's owned by a white person worth more, obviously that creates a problem. However, not participating in stock ownership is a major problem, particularly in the last year when anyone could have made money in the stock market. It wasn't hard to pick the winners. It really wasn't. So if someone tells you they're a professional because in the last 6 months, their stock portfolio went up 20%, most people's did. Like, you didn't have to do too much if you started out 6 months ago. Now, if you've done it for 4 or 5 years consistently, I want to listen to you. But if you just got lucky, congratulations, but I don't want to hear what you have to say. So the reality is that only 33.5% of African Americans own stock, whereas 61% of whites do. That's a problem. And I hope to be able to help in my own way in fixing that problem. You say, well, why is that a big issue, Shawnda? Well, it plays out in our wealth gap. Whites on average have about $86,000 of assets on hand to help them through a crisis or to transition from job to job or whatever. We on average have 11,000 and Latinos have 8. That's a problem. And we have to fix that. We have to be able to save more, put more away, invest more. And that investment can be in real estate or stocks. People always ask me the either or. The answer is both. Which is why I'll be calling you. I've got some questions. I have made like several notes. I've got some things I need to ask you because I'm trying to get that game working too. Multiple streams, people, multiple streams. All right. So the next slide, obviously in this short period of time, I just wanted to very briefly give you a how to pick stocks primer. Okay, so this is, I always tell people, if you can master Yahoo Finance, you can make the basic decisions that you need to make most of your portfolio work for you. And I love Yahoo Finance and I do leverage it in my class. Are there other things that are more sophisticated that you can use? Of course, but let's not boil the ocean. Let's start with the basics, okay? So this is the stock chart from Microsoft. I pulled this down today. And the reality is that anytime you're investing in a stock, the first thing you need to look at is you go to Yahoo Finance, you put the stock symbol in there, and you want to click over to the right. There are those different options for 1 year, 1 day, 5 day. You want to click to the 5-year chart. If the 5-year chart doesn't look like it's ascending and the money that you invested 5 years ago has drastically increased, then stop looking at the chart. You're done. That's not a stock that should be in your portfolio. I don't care if Rollo told you down at the gas station and he made $40,000 on it. Rollo's lying to you. Don't do it, okay? Because that stock does not have a good track record for making money, okay? Microsoft makes you money all day, every day. That's what the chart just told you. Believe the numbers. We believe in science. We believe in numbers. The number says Microsoft is a good company. Then some people will say, well, Shawnda, it's $232 and I'd rather buy the dollar stock. Okay, well, buy the dollar stock. That's gonna be worth 50 cents next week. Or you can buy a stock that already has shown you that it's gonna increase in value. And now they've made it so easy, you can buy a portion of the stock. You can't buy the whole stock. You can go to Robinhood and say, hey, I just want a half of the Microsoft stock. And that's the same value. When everyone else's stock goes up 20%, your half of a share still goes up 20%, same amount. Just know that. So that's part of it. The next thing you want to check is, does it have a dividend? I personally like stocks that pay dividends because I want to see that that company has so much money that they have extra money to pay me to still be an investor. I like dividends. I buy shoes with my dividends. I used to buy shoes with my regular money. Now I only buy shoes with my dividends because I want to pay for shoes for free. Nothing feels better than a nice pair of shoes that you pay for with someone else's money. I'm telling you, try it. It's awesome. So that's the other thing you want to look for. Does it have a dividend? That tells you that it's a long-standing company and they have money. And the next thing, and there's some much more technical things, but the basics are, when you look under the PE ratio and the earnings per share, is it positive? Are they making money? If they're not making money and they're not increasing and they don't pay a dividend, don't even buy it. You may miss out on the 20% today, but that company is going to go up and down because they don't make revenues, and companies that don't make revenues don't end up making you money. So that's the basics. Now there's some other things I can teach you at a later point, but if you get those down, you'll be pretty good. Okay. All right, let me go to the next slide. So here's an example, and I apologize for everyone who works for General Electric who's on the line, because I've presented this slide to some friends who work for General Electric and their little feelings got hurt. We're not talking about you as a person who works for General Electric. We're talking about General Electric as its ability to be in my top 5. Because I only pick top 5. I may do some other trading, but most of my heavy money goes to my top 5. And General Electric probably will never be in my top 5. Let me tell you why. So you do that same chart. You're going to go to Yahoo. You put GE in. When you go to the 5-year chart, does that look like it made anyone money? Ben, we'll let you answer. Do you see any money being made?
I don't see any money being made.
Right. I'm gonna go, I normally
I don't see the market wanting to get into the GE business.
Right. So unfortunately, when you go to the 5-year chart, Yahoo helps you make the decision. If it's green, it means it made money. And if it's red, it means it didn't. And this one's red. So for the 5-year chart, it's red. GE is a no for me. Now, has GE gone up in the last few months? Sure, but I'm talking about my long-term money. It's no different than when you're picking a babysitter for your child. Do you want someone who has a long-standing track record who you can trust? Or are you going to leave them with somebody that you found on the end of the street? That's probably not a good idea, right? So you don't want to leave your money either with someone who's in that predicament, okay? The earnings per share are lower. There's quite a few other red flags. And even when you look at the individuals who evaluate the stock, it's pretty much told you in this bottom corner where it has these short-term, mid-term, and long-term, it's pretty much told you there's gonna be a rocky ride for a while. So you gotta have a lot of faith. I don't have that kind of faith. I like to make money. I have faith at church. I wanna know that I'm putting my money into something that's going to make me money, okay? So that's to make it as plain as possible. That's the basics to stock investing. You can do that.
Amen on that. Sorry.
So those are the basics, okay? Now let me go to the next level, and there's several other things that are next level, but just to show you something else. This is for Microsoft, the same company that we've already decided is a good bet because they've made money historically and have a great track record. The other thing you want to check is, do they have revenue, and are those revenues growing? People always ask me, well, when do you sell it? When the revenues stop growing. That's why, if you noticed, Tesla reported this week, the big pressure was they've had great quarterly reports for a period of time because they wanted to get on the S&P, and then they missed. Well, they're going to have some people are going to be backpedaling because they put all this money into a stock that's supposed to have a proven track record. And then the first quarter after they make the indices, they didn't make it. So that's a problem. It's probably going to be some retraction on the price. I own Tesla periodically. I don't trust Elon Musk enough to keep my money with him, but I do periodically ride the ride for about $150 or so. Then I jump off and wait for him to say something stupid. Then I buy back. That's my Tesla strategy. Don't do what I do, but that's what I do. Okay. So this Microsoft, if I look here in 2017, they made 89 million. 2018, 110, went to 125 and 143. Those numbers keep going up. That way, your stock value will keep going up. That's what you want to see. That's the second thing you want to check. If that doesn't check out, that's not a stock that you want in your top 5. Okay. So that's another basic. Now there's some other pieces and parts that you can do, but as long as the top line revenue keeps increasing, Wall Street is very tolerant of debt and all the many other things, which you'll see from other stocks. Okay. So then in your top 5, those are your core holdings. So all those have increasing revenue. There's companies that have been around for a long time, but we all like sexy things, don't we? We can't just buy the boring ones that are going to make us 15% a year. We want the Nokias and the Teslas and the so on and so forth. So in my portfolio, and you have to make your own decision, 25% of it, I'll play with other things. I'll buy things. I bought AMC this week. I don't normally buy AMC. It didn't make sense, but when I saw the volume numbers, I was like, something's going on, so I'm going to buy it. And if you follow the news this week, it was the biggest story going, GameStop and AMC. And I made a killing over one night. I didn't even own the stock for 24 hours. I woke up Wednesday morning and it was like Christmas. I was like, wow, I had that stock. Let me go check. I was sitting there with my finger on the button at 9:30 to promptly sell it so that I could get all my money out. And I probably should have stopped trading because then I got a little crazy, but I made quite a bit of money. I could have not worked the rest of the week. I must tell you that's what I do. I just trade. That's all I do. So yes, so that's the basic, all right? Now, the growth stocks. So you have your 5 core, and then you have some others that you trade in and out. You don't keep those as long-term. You may go in and out of those. You know, you make your decisions, and we talk about how to do that. But on those stocks, if you look at this 5-year chart for NEO, for like up until 2019, it wasn't doing anything because EVs hadn't caught on or so on and so forth. So you don't really see anything there. It's very low volume, didn't really do anything. However, since 2019, they've actually really picked up, and we know that EVs are the future, right? So this is a growth stock that I would evaluate. Now, when I go to earnings per share, there we go. They're not making any money. I'm buying this on faith because they're not making any money. Okay, so when I listen to their earnings call, I want to listen to their business plan. How do they plan on growing? How many new plants are they opening? What new technology do they have? How are they differentiating themselves? Those companies you really need to do homework on. I buy NEO because I think it has the potential to do many of the same things that Tesla does. In China, they've had a great receptivity and their volume is growing. They actually are introducing new models. There are a lot of great things in the story, but you only buy it after you do some homework. It doesn't take a whole lot. Right now, they have made stock investing so easy. All you have to do is have your phone and flip through a couple articles a month, and I know everything that's going on with NEO. Like, okay, I'm good. I feel comfortable continuing to invest in them. I still want to make sure the revenues are good. So I would do the same revenue discussion that I had with Microsoft, but instead of it being year over year, I'm paying very close attention to their quarterly earnings. Are those quarterly earnings increasing? If they're getting stagnant, I don't want to hold that stock. I don't have that much faith in you. You already aren't making any money. So I don't have that much faith in you, okay? So I need you to know that every quarter, and I know for a fact that their growth has been astronomical. So your expectations for a growth stock, because it is a growth stock, is that their revenues are making leaps and bounds. So the other ones, you were like, okay, that's just going up steadily. Maybe it's going 12, whatever percent. I want to know that NEO is growing astronomically because we got to make up this 44.10 that we're missing because I'm paying you all this money and they have a market cap of $90 billion. I need you to deliver on those funds at some point. Okay. So that's how that works. And that's how you evaluate that. Okay. It's going to be a rough ride for them as well. If you look down here in the performance outlook, that's why the stock is kind of stagnant, goes up and down. The last thing I'll tell you about a growth stock. On the Yahoo Finance report, you see something here in the second column under market cap that says beta. A beta of 1 is a company that is pretty steady. Steady Eddie, you probably don't get a whole lot of excitement out of it. You're gonna get your regular increase, 10, 20%. The stock's gonna stay pretty steady. This one is 2.81. What that tells you is this is gonna be a volatile relationship. I'm going to love it on some days, hate it on others, because the stock price is going to go up and down and up and down and up and down because they're trying to establish themselves. And all it takes is some bad news to throw the stock off. So if you have the stomach for that, then you go ahead and buy the stock that has a 2.81 beta. But know that it's going to have that. And if you're committed to it and you want to make a successful strategy, when it dips, you buy. And if it goes up, you might want to sell it. I sell NEO in and out, and sometimes I keep shares. It just depends on my mood. But you need to understand that that's the ride. Now, what always happens when I help people start investing, they call me on the day when NEO's up 25. Oh, they're feeling bossy that day. They're like, oh, my NEO's up 25. God is good. Won't he do it? Da, 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 da. Fast forward 3 days later, and that same stock, which we already knew was volatile, dips 20% and they're ready to jump off a building. No, we knew the job was hard when we took it. We knew that. We knew it was a 2.81 stock. So just know that that's not your personality. And I have friends who invest. I have one friend, she doesn't want a whole lot of fluctuation. She wants, there's just a bit, and she does better than most of my friends who take all of the wild rides because she consistently invests. She consistently finds more money to invest. And she doesn't pick stocks that have beta of 2.81. It's good for you if you have the time to reinvestigate why it's going up and down. It's good for you if you have the temperament. But if you don't, go ahead and tell yourself that it's perfectly fine if everyone else got the 25% today and you didn't. You won't be around the day that they have the 20% reduction because you won't be on that ride. You're trying to pick a stock that has maybe a beta of 1 or 1.5, which is a little more calm. So I just want to make sure I share that with you. All right, I don't know how I'm doing for time. Someone asked a general question, ETFs, REITs, should you do that? Yes, you should diversify. But I also tell people don't be a one-trick pony. Please don't fall in love with a stock and you put all your money in that one stock. You should have few, like I said, I usually have 5 basic ones, and then I have a couple others that I trade. These I invest in. I'm putting long-term money in there because I want to get that 5-year run. The reality is if you put $500 a month into these 5, you'll probably be sitting on $100,000 in 5 years. That's what I want. I want an extra 100,000 in there, or an extra 200,000, or whatever your goal is. But if you have a goal of having an extra $100,000, it is very easy to do if you find money to put in the stock market. Sell a purse. We don't all need all these Louis Vuittons. Someone put that in the stock market. You'd be surprised. You can buy some Louis Vuitton stock if you want to. You don't need all those cars, fellas. You can only drive them one at a time. So why are there 4 in your driveway and only 2 people in your house that drive? Sell one, put that money in the stock market. Get your money up, okay? And then we won't have that disparity that we saw in the first slide, okay? And then always keep cash. You don't want to have, if you have a $50,000 portfolio and all of your money is in the market at one time, you can't take advantage of opportunities. So decide what percentage you want to keep on cash so that you can take advantage of days like Wednesday, which really were kind of abysmal. Well, if you had money on Wednesday to buy, you were really happy today because things went back up a little bit and you would have made some money, easy peasy, okay? Alrighty, lastly, that concludes the sort of the highlights. If you're interested in taking my class, please email me at strategic513@gmail.com. I have 2 classes starting this weekend, but if you can't make Saturday or Sunday of this weekend, I do offer other classes and I can put you on the waiting list. And now I'll open up for questions.
Okay, well, one of the questions, because you definitely covered why it's always important to invest in the stock market and real estate investing, is as an organization, as a people, we're always about wealth accumulation, building wealth for this generation and the next generation. And you showed us a little about some of the how to do research. Well, some of the best avenues for beginners to invest in stocks. So how do you basically recommend for some beginners to get involved with investing in stocks?
I think the first thing is just to be involved in the conversation. So turn on CNBC and listen. In the morning when you're getting dressed, you know, maybe you pick 2 days a week where you're like, and I'm just going to listen to them and hear what they're talking about. I don't follow everything that Jim Cramer says, but he's another person who you're laughing. I don't follow everything he says, but I think listening to him over time will allow you to develop your own ideas about what you want to invest in and what you don't want to invest in. The questions that people call in usually are questions that you have, and you're like, oh, always wondered that. And then someone will be able to answer it for you. It is so easy now to educate yourself in how to invest. I take classes regularly. Some of them are free. If you go to TD Ameritrade, they have free investing classes. You can learn how to do options, covered calls, anything you want to do. If you want to pay for a class, obviously my class is an option, but there are other classes. Now, what I will caution you on is there are many classes out there that are $1,500, $2,000. I don't personally feel that unless you're already investing and you've gotten to a place where you have a skill set that you need to develop drastically, that you need to pay that kind of money to do something. I just don't believe that you need to do that. There's too many resources out there. However, I don't have a problem with paying someone for their services. So I usually take a couple classes a month and I usually pay for at least one. And there are quite a few people, and many of them are African Americans out there who can train you on certain things. So my class, I do basic investing and I do a secondary investing class. If you wanted to do options, I'm actually taking classes right now. I want to be able to teach more options classes at a later point, but I would never teach a class that I didn't understand fully and have had success in doing. So I found some other people that can do that. I'm also currently taking classes from Tyrone Jackson. I don't know how many of you know him, but he's an African-American investor who he teaches millionaires how to make money. He has a very different approach. I agree with some of the things he says, and some of them I just don't understand to agree with them, which is why I'm taking his class. And so I will try some of his strategies. But what I will tell you is if you haven't tried at all, at least get your foot in the water. It's not hard. You can invest on your phone at the grocery store these days. It's that easy. It's that accessible. And then start working on your strategy, because obviously as you have more money to invest, you don't want to be winging it. You want to have an actual strategy behind that. But at the end of the day, the basics of investing is making the time, whether it be real estate investing or stock investing, and putting aside the resources to do so. And so I always tell people, make it automatic. I think it's hilarious that when we go into a career, they spend most of the time, first of all, we go to college, no one tells us about investing. Why? It's not hard. It wouldn't be hard to add an investing class to the curriculum, But heaven forbid we teach people how to not need a job, because the reality is, if you get really good at it, you may not need to work. I haven't worked in 2 years, but they don't want you to feel that feeling. They want you to feel tied to the job. So instead, they hold out the 401k as the awesome thing. Well, I can't get that till I'm 65. So what am I supposed to do in the meantime? Well, they never tell you that because they don't want you to know that part. It's very intentional, let's be honest. So I always tell people, because you want to be able to have the life you want to have with choices and liberty, make sure you're getting more and more money that you can put in the stock market. When I was younger and I didn't have a lot of money before I was, bonusable, I would calculate how, the 2 extra paydays that you had, 2 extra months that you had an extra payday every year. And I would purpose it in my heart that I was going to put that money aside. And then as I got older and I started being bonusable, I had a boss who pulled me aside and was like, don't you spend that money. I'm like, she didn't tell anybody else that. Like, I don't understand. Is she picking on the Black people? Like, why did she feel like I needed to know that? Well, she did that because she loved me. And she wanted to make sure that I knew you didn't need the bonus money. It's wonderful that you got it, but you didn't need it. Your salary was perfectly fine. So take a large portion of your bonus money and put it in stocks. But don't let me get started because I get excited. So what's your next question, Ben?
Okay, another question was, could you go a little bit more into exchange traded funds? Because I love ETFs. I mean, since I'm very busy, so I don't have much time to research companies, but I know what some sectors are going to do well. So I typically times I'll invest in ETF in those sectors. So could you elaborate, give a little bit more education on what ETFs are and ETF investing?
Yes, so an ETF is a group of stocks. So inside of that ETF, they purchase things with a certain purpose. So one of the ETFs that I have, it's a fintech ETF. So most of the monies that they invest are with some of the leading fintech companies. I am a big fan of Cathie Wood. I don't know, everyone knows who she is, but she's the Warren Buffett of our time, and she's female, which I'm kind of digging that part too. And she creates great returns for her investors. So her company is called ARK, and they have an abundance of tech ETFs. And the reality is she has time to research that a lot more detailed than I do. So she does a lot more homework and her staff, and obviously she's not doing all the research. And so then her company puts billions of dollars into fintech companies in hopes of them growing. And she's had a great track record of creating revenues. And so that's the one that I really am into. But there are plenty of ETFs. And so if you go to Yahoo, it'll give a list of ETFs as well. I agree with Ben. If you know that your style and your time is, you don't have time or you don't desire to have to do a lot of that homework, an ETF beats your money being in the bank all day long. And you're going to get good returns, and some of them have great returns. It just may not be as great as if you really researched and did individual stocks. But no, I do ETFs as well. Again, my philosophy is REITs, ETFs, and stocks. I don't think your answer needs to be either or and real estate. I think you need to diversify in order to get the results that you need.
And this one's for another one before we start opening up to questions for you and Sil. One of the attendees asked the question, what's a red flag beta to look out for?
So a beta should be around 1. So if it's 1, 1.5, 1.6, you're fine. Once a beta starts getting close to 2, you're starting to get into a volatile relationship. And if that's your thing, that's your thing. There's some people who like high volatility stocks because they sort of buy on the dip and they like the ride. But generally speaking, you want a beta that's between 1 and maybe like 1.6, 1.7.
Okay, and now we'll also get back into a conversation that we started having with Sil, jumping this as well too, about cryptocurrency. Since now, people have been, since crypto, especially Bitcoin, has really shot up this year, and especially in the last couple of years, as crypto has really grown into our lexicon, our conversation. I want to get you guys, to share with the audience your feelings on cryptocurrency and cryptocurrency investing.
I will let Sil answer because he actually seems to be more skilled in that. I don't do cryptocurrency because I don't invest in things that I don't understand. So when cryptocurrency goes up and down, I'm like, but why? Someone tell me why. And I can't get with that. So it doesn't work for me. I do buy some stocks that like Mara is a stock, is one of the Bitcoin miners or whatever. And I will day trade that. I won't long-term invest it, but I will buy that. So I'm probably biased, but I know that Sil does it and he does it well. So I'll let him answer.
Sil?
Yeah, you know, one of the simplest ways to to invest in a Bitcoin is on Cash App. If you got Cash App, you can go right into Cash App. Down the bottom is a little wiggly line. You touch that, and you go up to the top. It'll say stocks. So you can also buy stocks on on Cash App, and you push Bitcoin. And you can invest $100. You can invest $1. You can invest from $1 up in a Bitcoin, but I would advise you to invest more than $1. And then what I do is, I'll give you an example. The other day I went into Coinbase, right? 2 days ago, I went into Coinbase and I bought a bunch of cryptocurrencies. Well, I'll share this personal information. I invested 10 grand. That was 2 days ago. I'm looking at it right now and it's worth $11,532.54.
You bought which cryptocurrency?
I bought Bitcoin, Ethereum, Litecoin, and AVAX.
Yeah.
Okay.
There's as for those
So
who know coin,
in 2 days, I made 100 $1,500.
so for the audience, coinbase.com, it's a digital wallet. So
Right.
you can go to sites like that. That's one of the easiest way to buy cryptocurrency. So you can, you'll set up an account, you move your monies, and sometimes even let you buy via credit card. But you can move your monies from your account to your Coinbase account,
Correct.
and then you can buy cryptos. And so now there's probably maybe close to 20 cryptocurrencies that Coinbase allows. What's the biggest being Bitcoin and its derivatives, Ethereum, Litecoin, Maker, and a number of others.
Right. Yeah, and I don't hold them. I don't hold them long. I monitor them twice, 3 times a day. I mean, cryptocurrency trades 24 hours, 7 days a week. You can drop $1,000 on a Bitcoin at 6 o'clock in the morning, and you get home at 6 o'clock and look at it, and it'd be worth $1,500. It'd be worth $1,500, or it can be worth $500 because it's up and down, up and down, up and down. So I don't hold it. I don't advise anybody to hold it. I just don't like my money sitting in the bank because I ain't making no money off of it. So I move it around into that. But the easiest way to buy, if you just want to buy Bitcoin, is just to go right into Cash App. When it hits a certain point, you comfortable with $200 on your 1,000, are you comfortable with 500? Then just sell it. Pull the profit out and put it back in there. Put it back into your Cash App. Take your Cash App, cash it out into your bank account.
Why not? Just send the money.
And so that's what I do. That's how I do crypto. I'm like Shawnda. I don't know what causes it to move. Sometimes, Shawnda, sometimes I don't know what causes stock to move. I look at the news and they say they lost a whole lot of money, but the stock shoots straight up.
I agree.
So it's just you just have to be cautious about what you do. But that's what I do. But I watch it all day long.
Okay. So some other questions, because like I said, crypto can be its own conversation, because as I even mentioned to the panelists, I first got into Bitcoin crypto early 2017. And then I already knew I was late, because when I started hearing the G20 figures start talking about cryptocurrency, I'm like, uh-oh, that means I'm already too late. So I started buying around 2,400. And the easiest way then to buy crypto, Bitcoin, was GBTC, which is a stock that's traded on the New York Stock Exchange. And all they do is buy cryptocurrency. And I just, she started buying some, and then in 1 week I made 25%. And so then I bought more. Next week I made 25%. But GBTC typically has a premium, and sometimes that premium is up to 40% for basically Bitcoin. So it's buying Bitcoin. And so let's say Bitcoin is $10, but you're paying, basically $14 for a share of GBTC. So that's when I went to Coinbase and started buying Bitcoin directly and some other cryptocurrencies. Even got involved in the ICO, which is the initial coin offering, which is similar to an initial public offering. Invest in some mining companies, and with cryptocurrency, they mine it. So there's basically these computers that run and do algorithms to essentially quote unquote mine this, and these miners get rewarded with cryptocurrency. And even when I thought about getting serious with it, I even went to this cryptocurrency conference in Dallas to understand, because there's even cryptocurrency trading platforms and many other things out there. So like I said, that's another conversation itself. But in jumping back into the stock and real estate, so another question is, how did you originally fund some of your first purchases? Some people are saying, would you recommend using maybe your 401k or to do any real estate investment?
Initially, when I started out, I invested with two other guys. This was way back, maybe like 20 years ago. And we all went in with $1,500. It actually took me 18 months to save up $1,500. And so we all invested together and bought a piece of property. And I learned a real valuable lesson too. I worked that everybody don't have the same work ethics. And so we invested in this piece of property, and it ended up being extremely profitable. And so I took my portion of the investment and I reinvested in the two other pieces of property. And at the time that I was investing, you can get these crazy appraisals on properties. At that time, they was inflated. And so that's how I initially started.
Okay. Another question is, would you recommend self-managing your investment or utilizing investment companies?
Say that again?
Would you recommend managing your own investments, or basically using a financial advisor or an investment company to manage your investment? So Shawnda, in terms of stock market, and then Sil.
I think that there is a role for both. To have someone to talk about the overall plan and things that you may not be thinking about periodically and check in with, I think is a good idea. However, I personally don't want anyone to give me advice that I don't understand myself, and I haven't self-directed. That's just me. I'm just that person. And I think there's enough resources for me to be able to do that on my own. So I don't have an overall financial advisor, but that I do have friends who are financial advisors, and I may call them and ask them a question periodically about something, just about asset protection or what to do with an asset, should I pass, or that kind of thing. But to manage my everyday stock portfolio or something like that, nowadays it's so easy. I just don't feel like I need that. However, everyone has a different comfort level. And if you don't feel comfortable with that, there's nothing wrong with you deciding that you're going to have someone else to help you. Just make sure that you still understand every single step of what they're telling you, and you don't put anything in their hands or even let them make decisions where they benefit. So they're selling you an annuity where they benefit versus something that makes sense for you, because oftentimes that's what ends up happening. They're selling you products where they get proceeds from that sale. It's not what's best for you, it's what's best for them.
Okay, and since you go Sil, go right ahead. You're on mute right now, Sil.
What was the question?
The question is, do you recommend managing your own investments or hiring a professional?
Right. Yeah, I'm like Shawnda. Even in real estate, people. I manage all my properties. I manage them. It really is as simple as, it's a simple process, but sometimes we complicate it with how we deal with people. And when you, as a landlord, you have to train people. You have to train them, because people will call you about everything. So, the way I manage my properties is, if you got a problem with another tenant, you call the police. If you got a problem with the water, you call the water company. If you got a problem with utilities, you call Duke. There's no emergency for you to call me. Even if his house is burning down, you call the fire department. So there's no reason to call me about anything, that I can't get to the next day. Now, if there's a pipe that bursts, that's the only thing I want you to call me about, and I'll come immediately, or send somebody over there immediately to do that. But I subcontract all my work out. So the thing about being able to manage your properties is being able to find a good handyman. And you have to pay him. A good handyman will save you a whole lot of time and a whole lot of problems. So I manage everything.
Okay.
I got it down to a science.
Now, another question, I think, for Shawnda.
Thank God for technology, especially Cash App. Cash App and Zelle and all that because they can just send me the rent.
I understand. You can send people money instantly all over the world.
I could be in Florida. They can send me my rent. Yes.
Okay. Another person, I think this question is for Shawnda. This person asked about, are you familiar with Jeff Brown and his top 5 big tech companies? I know there's probably a number of, a number of people out there that always make recommendations.
I'm not familiar with that name, and I'm writing it down now because I'm always trying to find new people. Again, if his top 5 big tech companies check off the things that I just said, and when I do a little research and I can buy into the vision, because really, when I buy a company and I'm planning on putting thousands of dollars into it, I need to be able to have an elevator speech for that company. Why do you like that company? These are the top 4 reasons that I have a reason to believe in that particular company. So if those 5 big tech companies have that story that you can believe in and it gives you a little excitement in talking about, then I go with it. But that's what I would use. I don't use any, I'm just the kind of person, I want to kick the wheels myself. So if you tell me something, I'm going to go do my own research to decide, yes, that's right for me. But I'm guessing if he's making those recommendations, he's done some homework. So I would just ask the question of what's behind his rationale for those 5.
Okay. Well, now we're about 7 o'clock, and I'm going to start wrapping this up. But I want to thank you guys. I want to thank Shawnda and Sil for their time and sharing their knowledge with us, and all helping each of us, build our wealth for ourselves and our families. Because simply put, I'm a big believer in wealth creation, and that creates real change, and you can create generational change. But I wanted to finish up with Shawnda and Sil, each giving them maybe 1 to 2 minutes each, kind of a wrap up. So I'll first start off with Shawnda, giving 1 or 2 minutes wrap up, and then with Sil, then I'll close out the program.
Definitely. My final words would be, wherever you are, make sure you take a step soon to at least get your foot in the stock market. And so I tell people all the time, don't start with big money because you got to figure some things out. You're going to make some mistakes. You're going to lose some money periodically. Just get over that. That's part of the process. But start yourself a Robinhood account. And when you get to the grocery at the end, say I'm gonna put these 4 things back, and I'm gonna automatically put that money into my stock account. TJ Maxx is my weakness. I get to TJ Maxx, I intentionally get to the end of the register, I'm gonna put these 4 things back because I don't need them. I'm only there because I need to just check on the workers because they're my friends. And so I'm only there because I need to check on them. I don't need any stuff in the cart. So I put some of that back and then I put that in my account. That's what I call my shoe money. So that money, if I lost every single dime, I could care less. And then start investing with that money. And then, the Bible says if you manage or if you're good with small things, and if you're faithful with those things, the Lord will give you big things. It's no different with stock. Manage that small amount of money, see how that goes, and then start putting astronomical amounts of money based on your budget, wherever you can find some money. The reality is, according to all the literature, we shouldn't be spending money right now in COVID. We're not going to parties. We're not going to concerts. You don't need any new shoes. You have gym shoes and slippers. That's all you need. So that should be so much more money that you're putting into your investment plan or paying down debt. You should truly have a testimony of, I paid this $10,000 debt down. I put $5,000 into my stock account. You can do that because you already are in the talent of 10. Now let's put 10% of that money where it needs to go. So that would be my final words. Find the money, get your money up.
All right, thank you much. Sil?
Show me the money. Hey, I say be transformed by the renewing of your mind. Your biggest obstacle is your mind. It's the way you think. If you can change the way you think, you can change the way you live. I read 2 books. Well, I read a lot of books, but most books that I spend most time in is the Bible and Think and Grow Rich by Napoleon Hill. Because you got to change the way you think. And I did a seminar, and I was actually at New Prospect, and I was teaching people, and I asked a question. I said, can you see yourself as a millionaire? And be honest with yourself. Nobody raised their hand. Nobody raised their hand. So if you can't envision it, you're not gonna have it. That's the most, I tell you, if you don't have a vision board, you need to put one together tonight. You need to put a vision board down there, put the house, the car, the watch, whatever it is, write yourself a check for $15 million in your name, Put it on your vision board, you know, because you have to have big visions. And the only thing that's going to stop you from building wealth is you, not nobody else, not the lack of money. You know, don't be saying things like, well, when I get out of debt, I will. When I get my credit straight, I will. No, do it. Do it and watch and see what happens. You know, the most powerful thing one of the most profound things that happened to me is I was sitting there watching TV. And I was watching TV and these people were running and jumping and moving and just all kind of action. And I was sitting there looking at the television. I don't know why I was looking at it. And I was looking at it and the screen went black. And 3 words popped up. It said, just do it. And I put that on my wall for about 3 years. And every time I walked out the house, I saw it, just do it. And I tell people all the time when I teach in seminars, why talkers are talking, builders are building.
Once again, I gotta say amen on that.
Yeah.
All right. As we wrap this up, once again, I want to thank Shawnda, DeRamus, and Sil Watkins for sharing their knowledge and being part of this program. And now I'll wrap this up. I'll also let you know that we'll have another program next month, Thursday, February 25th at the same time, Leadership, brought to you obviously by the National Black MBA Association, but I also invite you to go to our website, look us up, see what we're doing, and also become part of the National Black MBA, because through the website, you can click on the link to actually join and be part of National and associate with this chapter, continue to help build this kind of things and do these kind of programs in Cincinnati. But also for those that attended, I've mentioned 2 people will receive 20 shares of Urban One stock. So we'll be sending out an email to the attendees with a survey. So out of those people that complete the survey, 2 of those will be randomly selected to receive 20 shares of the Urban One stock, because simply put, we're about trying to help you build wealth and make sure you take seriously, you know, your accumulation of stock. That's what we plan to give you some. So once again, thank you for your time. Thank you for attending. And thank you, Shawnda, and thank you, Sil.
Thank you.
Sure.
All right,
It was
bye.